The market is softening up. I'm Tim Diesel. I'm a commercial real estate consultant. Today, we're going to discuss what to do because the market is softening up in a lot of areas. So, it doesn't matter where you are. And let's break these down a little bit because this is a commercial real estate business type channel. But I do want to cover residential real estate because it could be tied to it a little bit. So, it doesn't matter where you are. Let's say you're in Montana, Chicago. It doesn't really matter. A 3-bedroom, 2-bath house is going to change. The price of it is going to change. And let's just say, I don't know, you have a $400,000 house that you're buying. 3 months ago, beginning of this year, that house had a cheaper payment with the same down payment, same everything, right? Because the interest rates were low threes. Okay, now they've gone up 3 points. That payment is really changing on a lot of people. Here's the interesting part. You're still going to have buyers because you're still going to have people moving, divorcing, whatever the case is. They're going to need to upsize, downsize. It's going to happen. The interesting thing is this time around, people have equity in their homes, right? They paid cash, they put 10% down, 20% down. Everybody said the loans are better. Banks aren't doing stupid stuff. Yeah, they are. They're doing all kinds of crazy stuff. You just have to see what they're doing. Regardless of how someone got their loan. So let's say they put 10% down, 5% down, whatever. They have a little bit of equity because the prices have been increasing crazy in the last year or two, really going up. So what do? How do they tap into that equity? If they don't have great credit, they can't get an equity line, right? Maybe they don't want to sell, maybe they're going to refi the whole thing, maybe they can't get the best rate. If their credit is perfect, there's no way they're going to get the same rate they were locked into a year ago. So that's going to cause a problem. And I'm not saying I know what the answer is, but I'm saying many people are going to have to sell. That's just what's going to happen. And they're going to do okay. They're going to do very well. Now, on the commercial real estate side, you're going to have a lot of people that maybe they were waiting to buy an apartment building. Maybe they were waiting to buy a retail center, whatever it is. The numbers didn't make sense to them because you're putting down all this cash, 25%, 30%, and the cash flow is not as high. Well, the sellers are going to be forced to reduce their prices. I believe those cap rates have to start going up. When I'm talking about cap rates, I'm talking about the return on the property, right, that it gives. Now, because the mortgages are going to go up. So as these rates move up a little bit, now eventually they're going to slash rates back down. But in the immediate future, people are going to have to think about that before they do anything. So don't be spooked out. Don't be scared. If you bought right, if you're in a project, you should already have a plan because you shouldn't get into anything without an exit strategy. You shouldn't get into anything without a management team and all kinds of stuff that we've talked about. So you should be prepared for all this stuff. The thing is, start looking for opportunities because I have a feeling a lot of opportunities are going to be coming. Depending on where you live, you're going to see different opportunities, obviously, but take advantage of all of them. And the biggest turn is going to be now there might not be a lot of people with adjustable rates. Most of the time you find that like in businesses, on a business loan. I don't see too many of those on a residential property. I don't see anyone that does a 30-year adjustable. They could be out there, but those aren't really the opportunities to look for. Commercial loans usually are 5 years, 7 years. I've seen 10. It just kind of depends. 10 years ago, the rates, I don't know, maybe they were a little bit better. It just depends on the kind of loan the guy has. So there could be a lot of opportunities coming up. So just kind of keep an eye on that. I hope that was helpful. If you have any questions on anything, please let me know. Thank you.